Okay, welcome everybody to another edition of Land Cycle Investor. I have with me today Leith van Onselen and Cameron Murray, my two favourite housing commentators for cutting through the bullshit that's in the media and telling it how it is. And of course, what we'll discuss today is a little bit about current policies that are being spruiked in the media, what effect that might have on the housing market. And also we'll look at the cycle and what we can expect as leading indicators for when we get to the end of the cycle that might differentiate from what we're seeing now. So welcome both. Thank you for joining me. I called this the Great Housing Debate, but seeing as we all agree on much of the information that we talk about, I'm not so sure that we can say that it's going to be much of a debate.
No, I doubt it. I think we're going to probably agree on most aspects on this.
I think so. Shall we start just initially, because we've got quite a bit to get through, but let's just start initially with you, Leith, on what's going on in the media, because you have come out over the last few weeks, and even on the last interview that we did, you were talking about immigration, the pushing of the demand side of the property market and how that was affecting prices. And then we've had this announcement recently about another huge building commitment from the federal government. Why don't you fill us in?
All right. Yeah. So basically, look, anyone who studied economics at high school. So I think when I first did economics back in 1994, Pearl Jam was, still rocking the charts. And basically, we learned about this thing called supply and demand, basic economics. And the way you read the media and the commentary and everything else out there, it seems like there's only a supply side of the housing market. They never mention the demand side.
Yeah.
So basically, it doesn't matter who it is, whether it's, fake think tanks like the Grattan Institute or I'm calling them out, but, or obviously the federal government or the property industry, et cetera. It's all about, we've got to boost supply. We've got to boost supply. We're not building enough homes. And it basically, it ignores the fact that last decade, so the 2010s, we actually had the biggest building boom in the nation's history. We built more homes than ever. And yet we still fell behind in housing supply, supposedly because we ramped up population growth to levels we've never seen before from 2005 through the federal government's mass immigration policy. So now we're basically, we're stuck in this situation where we've obviously got this rental crisis at the moment. Rents have soared. We've got, obviously more people living in group housing. We've got increasing rates of homelessness. There's a lot of panic around. So the federal government has now, said, it's all about supply. It's supply, supply, supply. So they've had this national cabinet this week where they're basically committed, and I put that in inverted commas because it's complete BS, to basically build 1.2 million homes over 5 years, starting July 1 next year. Now, they're not really building them. I think Cam's going to agree with me on this one. They're not building them at all. All it is they've got this, motherhood statement, propaganda to basically say, we're going to relax planning and hope that the private sector builds 1.2 million homes over 5 years. Now, I'll let Cam chime in a sec, but for starters, it's totally unrealistic because it's not in developers' interest to basically flood the market with supply because that reduces their profits and their gain. So for starters, it's going to fail on that point. Secondly, in the 5 years leading up to COVID, that was our biggest building boom ever. We built 1,050,000 homes. And a lot of them were really crappily built high-rise apartments across Sydney and Melbourne and also Brisbane. And we saw what happened. We had basically massive amounts of flammable cladding. We've had cracking. We've had leaky apartments. We've had balcony failures. They're really poor quality. And even if we could magically do this 1.2 million homes in 5 years, the federal government said they want basically apartments mostly, high density. What do you think that's going to do to quality? We're going to basically degrade quality even further because if you've got to build them quicker than we ever have before, you got to compromise in quality. It's just the fact of the matter. And I'll also add that we've only ever built more than 220,000 homes once in Australia's history. And that was in 2017. And under this plan, they want to build 240,000 each year for 5 years. That's 660 homes a day. Now, one final point before I kick it over to Cam is that under the federal government's immigration projections, so they basically projected 1.5 million net overseas migrants. over 5 years, which is the equivalent to an entire Adelaide worth of population. Australia needs to add, this isn't build, add, because you got to count for demolitions. You actually got to build more than that. They've got to build 330 homes a day just to accommodate that flow of migrants into Australia. So that there is really, which is ridiculous. That's a huge volume of houses you've got to build just to basically accommodate the extra people coming in. So the solution is not about boosting supply. Australia has one of the highest shares of construction workers in the world to its comment. So about 5% of Australia's population works in construction. The OECD average is 3.3%.
Yeah.
We also built the fourth most homes, relative to a housing stock in the world in 2020, according to the OECD. So we actually do build a lot of homes. The problem is we run one of these highest immigration policies in the world. And that all that basically ensures is that demand is forever running ahead of supply. And that's why I've got this housing crisis. And the solution is not to run the biggest immigration program in this nation's history. It's actually to bring it down to historical levels, which was under 100,000 a year, rather than running it at this year forecast 400,000, and the long-term average under the budget is going to be 260,000 net overseas migration. So effectively, it's really about demand. It's not about supply. And yet everyone, well, almost everyone, tries to claim it's a supply problem, when really it's a demand problem via fire hose in Australia with just far too many people. That's basically the long and short of it.
Cameron, are your comments?
Oh, look, I think we can disagree on a couple of little details just to add some flavor here. But I just want to reiterate that this policy or housing market situation we're in is not uniquely Australian. So it's not the product of some unique local politicians, planning for the wrong type of housing or NIMBYs or whatever. You see all across the United States, all across Europe, all across Canada and New Zealand, the same patterns that we're having now. And what's more interesting is this immigration story is also quite a global one. Canada, for example, I think is going to have 1 million net migrants this year. Is that right?
Actually, no, it was 1.2 million. So in the year to March, they did 1.2 million. So that's also the highest in Canada's history, even in a percentage terms. So it's the highest.
Yeah, well, Canada's only 50% bigger than Australia.
Yeah, that's right.
In current population, and they've got triple our record amount of immigration this year. And what I've noticed, so before I disagree, what I've noticed that's very interesting is the last couple of months in Canada and the last few weeks in Australia, the taboo on talking about immigration seems to have lifted. We've finally realized that this doublespeak, this political doublespeak that we've been subject to for so long is a complete show. And people are now speaking up and saying, look, you can't have both. You can't say it's a supply side problem. I mean, regardless of your view of what's causing prices, you can't be consistent and say it's a supply problem and we're also going to flood the market with a record number of people. Like, you can't do both, right? There's no solution there. And I think, by the end of this year, the debate on immigration and housing might be very different, and I hope it is. On where we disagree, I think at a fundamental level, I always say there's more housing per capita today than any point in history. It's bigger, it's better quality, and yet prices are still going up. And so what that says to me is that it's not when we say supply and demand, supply doesn't mean the stock of physical homes. It means the willingness to sell at a certain price or a willingness to rent at a certain price. And I think by talking about the stock of homes, we're really missing these fundamental economic insights about property markets that have meant that rent to income ratios in 1907 were 20%, in 1912 they were 20%, in 1939 they were 20%, in 1995 they were 20%, and this year they're still 20%. So rents rise with incomes over the long term. It just so happens that in the last 12 months, we've seen almost 5 years of rental growth in 1 year, because we had that 2017 to 19 period where rents fell after that record construction boom that Leith talked about. Then we had the COVID years in the capital cities where people left, but construction continued. And now we're sort of catching up to normal after this 5-year period. And so we're having 5 years of rent growth in 1 year. And that's what's really disruptive. I mean, in terms of levels, Sydney asking rents only hit their 2017 level in the second half of last year, according to SQM Research asking rents data. So that's 5.5 years to get back to the same nominal level. And so that's why the adjustment is so rapid now. And it's happening everywhere also. So this is another global trend, that the sort of post-COVID recovery is compressing years of rental growth into 1 year. And that's really disruptive because people have relocated based on what the rent was 2 years ago. And now the rent's suddenly what it should have been today. And so this displacement and this churn in rental markets is, I think, what people are really upset about. But we're sort of recasting the displacement and the churn and this catch-up growth as this somehow there's, 11 million dwellings is not enough. We need 11.5 million or something like that. So I really think having that perspective is important.
I just, before you jump back in, Leith, I wanted to mention, pull out something that you commented on, which is that it's not the overall stock of supply, but it's the availability of that stock of supply. Because obviously, you know that the studies that we've done at Prosper Australia, based on water usage data, which we've mainly done in the greater metropolitan area of Melbourne over a 12-month period, but we have identified in every single report that we've done, and we're about to release number 11, that there are tens of thousands of homes that are withheld from the market for one reason or another. It could be for speculative gain, it could be for renovation purposes, or whatever reason. But there was a big, I think Queensland also did their own study based on water data and identified quite a large number of properties that were being withheld from the market. And then, of course, in the census data, the last census data, when everybody was supposed to be staying at home, there was over 1 million homes that were empty. And obviously that's just a short-term statistic. But what I'm trying to say here is that actually we probably have more than enough supply to accommodate the population, but we have a housing market which is bent towards speculation. And so we have a hoarding of supply on top of it. So, do you have any kind of insight on that, Leith, like how can we get that supply utilized?
Yeah, well, I mean, obviously you have more crowding, so the number of people per dwelling rises. So we did see over COVID, at the start of COVID, when we had basic negative immigration, the number of people per house actually fell. And that's because obviously people moved out of group housing, they didn't want to live together. So we had more sole occupancy houses, you had less group houses, etc. We're now getting that reversing. So now basically the population is increasing so quickly compared to the rate of new dwelling construction that you're effectively having more people moving into group housing. That's been shown on flatmates.com and all these other sort of websites. And we are seeing an increase in homelessness now. So there has been, reports about increasing homelessness, etc. So, the people at very low rungs who can't afford end up getting pushed out in the street. I'll push back. I mean, all that stuff about rental growth might be true. The fact of the matter is, though, the rental vacancy rate now is the lowest it's been, I think, pretty much in my lifetime. So that does show that there is incredible tightness at the moment. Sure, there might be a whole bunch of empty houses, etc. But I think there always are. If you go to the census, going back the last 20 years, there's always a certain stock that's always, unoccupied on census night. So I think that's just the nature of the market. It's a bit like the unemployment rate. There's always going to be some people unemployed. But I mean, my issue with this is it's not really a disagreement. It's just that I always like to point out the hypocrisy in the arguments about it always being about supply. I mean, we saw it in the dying years of the coalition government when they did this, parliamentary inquiry into housing supply. And that was all the same sort of stuff. And I think Cam, you and me both did a submission to it. And it's always just focused on this one side of the housing market. And the federal government, and the hilarious thing is, the federal government, Albo came out and said, we've got this 1.2 million over 5 years agreement. If you wanted to really boost supply, the way to do it is you got to do it directly. And hilariously, his Housing Australia Future Fund, this so-called $10 billion punt into the share market to build a so-called 30,000 homes, is only 2.5% of that 1.2 million. So, the federal government's not really doing a whole lot here. It's just basically said, it basically thinks that you can do this invisible hand, you can just basically relax planning and you'll magically get, the private sector will magically build a ton load more homes and flood the market with supply and alleviate supply shortage. But, you know, Cam's written about this extensively.
Yeah.
It's not in their interest to flood the market with supply, because that's going to lower their profits and lower the prices. So it's not going to work. it's not going to work. So the whole thing's a farce, and let alone the fact that you got materials costs are going up, you got more labor shortages in housing, you got a whole bunch of builders that are going bust. Like, I'd argue that the capacity to build the amount of homes we did in the 5 years leading up to COVID, which was 1,050,000, is less now than it was then, and yet they want to increase that by nearly 20%. It's just not going to happen. And you know, the federal government could solve this housing crisis with the stroke of a pen by literally lowering immigration to levels that actually Australians want, and something that's sustainable, and not grow it like a science experiment. And the other thing is, even if they built these homes, what about the schools? What about the hospitals? What about all the other infrastructure that you need around those homes? Because if you don't do that, you're going to just end up with all these inner city schools, etc., that are completely overloaded. They're going to have to put, you know, demountable classrooms everywhere, etc. There's going to be nowhere for kids to play. So you've got to do all the other stuff around it to support this population growth. So it's not just about housing, it's about all the other stuff that goes with this population growth. But they never want to discuss it. It's always about this magical supply and this supply problem, whereas not looking at the demand side, which is controlled 100% by the federal government.
Yeah, look, they're really good points. I want to just make another point about this, which I think is going to be relevant in the next cycle. So obviously, you know that I write about the 18-year land cycle, and what we've got now is, if forecast by that cycle, would be a couple of years of quite strong house price appreciation due to the elements of supply demand that are happening, perhaps a loosening in finance conditions, people now being able to finance without serviceability buffers. But the other aspect of it is Australia is truly archaic in its development for being able to build something at a cheaper price. And what I'm referring to is 3D printing, where you have countries in Europe, in Germany, for example, which is quite far ahead in its ability to 3D print apartment blocks, which cuts down significantly on labor costs and cuts down significantly on material costs, because it allows different building materials to be used. In Australia, the only thing that I've heard about it in Australia was a news article that came out that said that they were 3D printing a toilet block in Darwin, I think it was. Yeah, I mean, I'd be interested in your thoughts on that, Cam, because I know that you keep an eye on new developments, what's happening. What do you think?
Look,
3D printing?
Most countries say the same thing. Like, if you go to America, they say, why can't we build houses cheaper? Like, pick a country that does it better. Canadians say the same thing. The Kiwis say the same thing. So I think there's a lot of, you know, unfair comparisons that happen every cycle about construction costs. Now, where we'll agree is that I think it's true that if the government wanted to flood the market and build these 240,000 dwellings a year that they want to, they would have to invest in some kind of more efficient construction and prefabrication, like we did during previous waves of public housing, where we had prefabricated and mass-produced dwellings of similar designs and pumped them out quite efficiently. So I think that's definitely true. That's what happens in one of my favorite housing markets, Singapore, where the Housing Development Board, because they produce in thousands of dwellings at a time, can invest what they call, at the moment, it's called precast volumetric construction, which is essentially little cubes of concrete with the complete fit out inside that fit on a truck and can be craned in like little Lego bricks with the rooms complete, or the you know, partially complete buildings. So I think, yeah, we agree there's definitely some investment needed there if you were serious about radically increasing the number of homes we built. But I agree with what Leith said before. You know, it's not just about the physical dwellings. It's not a physical dwelling problem. You got to school, house, connect roads, get power to all these people. And we wrote about in a report quite a few years ago that, you know, in the baby boom, in the last big immigration waves in the 20th century, all the new suburbs, they didn't have stormwater, they didn't have sealed roads, they had thunderbox outhouses for toilets, they had the night soil man come and take your poo in a rubbish bag every night or a rubbish bin, right? And then they were doing school at the church because there were no schools, and there were no sports fields. And I don't think we want to go backwards in terms of our quality of life and our suburban capital, let's call it. Just so we can pump out 240,000 dwellings instead of 180,000, because someone doesn't want to talk about the immigration program. So I think there's that, but fundamentally right now, I don't think building homes is the problem. I mean, we can look at, for example, caravan parks where, you know, building a caravan we know is very easy, it's relatively cheap, but it's the sort of property right to where you park it that is this sort of system-wide issue here. People are getting kicked out of already prefabricated homes because of higher prices. There's a scheme in that's very popular now. Well, they call it the land lease schemes, which are almost converted caravan parks. And a lot of people there are going, oh, my land rent's going up. I'm going to have to move. But they're already living in a very efficient prefabricated home that doesn't have these high, costly infrastructure needs. So I think, you know, we should really, yes, it's great to be more efficient in construction. I mean, I'm an economist. I love more efficiency, full stop. But I don't think that's the main problem. It's going to solve a problem right now unless it is backed by an organization that wants to flood the market with housing to a degree that exceeds the immigration rate, or to the degree that is willing to politically put offside all the current landlords. Now, when Leith was talking, it came to my mind that not only is there this economic constraint on how quickly private property owners will build, there's a political constraint too. I've been doing a lot of research on historical housing markets, and in the New Deal in the United States in the 1930s, when public housing first got ramped up, all the landlords lobbied like crazy and against public housing, because they said, you're going to steal our tenants and depress our rents, right? You can't just flood the market with public housing. And they made Congress agree to not house people who could otherwise be housed in the private market. They made Congress promise to differentiate public housing so it was crap in bad suburbs that no one really wanted it anyway, not integrate it into the existing housing stock. And so, you know, a good rule of thumb is a housing policy that works is going to really, really upset the landlords and property developers, because it's going to depress the value of their assets. It's going to, you know, depress the price they can charge their customer, as in the rent. And the fact that this recent policy announcement of this magic number, let's call it, on a piece of paper that has nothing to support it except, you know, political bad faith, maybe, is yeah, that's not going to cut it. No one's upset about that because it's not real. So that's kind of my take there.
Yeah, it was amazing. So when they announced it, I think I wrote an article that night, just basically saying it's straight from a script out of Utopia. And then yeah, I saw some other people say the same thing, but it really was. It was really, you know, basically the whole National Cabinet thing was, Albo got together with his Labor Premier mates and says, look, guys, we've got a problem. We're all under pressure here. The punters are getting restless about, you know, the housing crisis and all that stuff. We need a big announceable. And they said, well, we agreed to $1 million last year, you know, into their housing plan. How about we just have 1.2 million? We go, so one of them probably said 1.1. We go, nah, we need something bigger. Oh, 1.2 million. Yeah, that's the number. And that's what they came out with. It was just like complete spin. And even the financial incentives behind it are a joke. So basically, the way it works is the states last year agreed to do $1 million over 5 years, which is basically what we did 5 years leading up to COVID. And anything above that, they'll get an incentive payment of $15,000 per dwelling if they can, on a first in best dressed thing. The fact of the matter is, though, that they're very unlikely to even get to the 1 million because, again, the states are pretty much broke. And at the moment, like Victoria and, you know, New South Wales are struggling. They're the biggest ones. You know, they're cutting infrastructure projects left and right. They got shortages of builders for starters, and so they're going to have to obviously not just provide the houses, but, you know, the schools and the hospitals and all the other stuff. So if they can magically get to the 1 million, it's only once they get above that they'll actually start seeing some money from the federal government. So, it's all very hollow. It's basically, it's a propaganda document. It's basically a nice shiny propaganda document with a few key talking points, which they can go, look, we're doing something about it, when really they're not. And if they were serious on it, they'd lower immigration, because it's on the nose. People don't want it. The levels are way too high. And that would really solve the problem with almost a stroke of a pen. It'd be a lot quicker than hoping that the private sector will build, this 1.2 million homes really in 6 years, because it starts July 1 next year. It's a joke.
Look,
So,
yeah.
before we jump in, I kind of want to pull strands out of this conversation, a few conclusions out of the things we've spoken about in regard to this, to tie up what we're saying, some key points, which is one, that the government doesn't really care about housing affordability. I think we all agree on that, because there have been numerous inquiries over the years, which, we've all submitted to. And at the end of those inquiries, which are very good and they're very thorough, the policy changes actually don't happen. No. So nothing really changes at the end of it, and the cycle continues. So one, that they're not really interested in creating affordable housing market. Secondly, even if we have a flood of supply that comes onto the market, it's not necessarily going to lower prices, because developers are in charge of releasing that supply to the market, and they're not going to flood the market with supply. Even if we have lower costs of building materials and labor, in regard to 3D printing, that's only it's still not going to guarantee the market is going to be flooded with supply. And of course, lower costs in building construction leave more in the pocket to bid up the price of land. So it's not necessarily going to impact the cycle from that point of view. Let's hone in now on exactly what's going to happen over the next 2 years. Despite the spruik that we're hearing from the government saying, okay, this is going to make housing affordable, and then people writing to me and saying, oh, is this going to somehow impact the cycle, or is this going to somehow slow down housing gains over what we would establish? And I know, we're not all a cycle analysis here, but this is for the land cycle investor, so you will excuse my talking about it. But the last 2 years of the cycle are historically the most bullish 2 years. So if we're taking it in context of that, we actually would be saying, we're in for a bull market over the next 2 years. So I will throw to you, Cam, to have your opinion on that, and then we'll come back to you, Leith.
Yeah, I think a lot of people have been surprised at the rebound in housing prices since February in the capital cities, given that the interest rate on mortgages has increased so much. Even myself, I was paying 2.0 something percent, basically 2% even at the start of the year, and now it's closer to 6%. So I'm paying 3 times as much interest on the money I've borrowed in my mortgage, and I'm relatively conservative, I think, compared to many households who bought in the last couple of years. So this bounce has been a surprise. A lot of talk recently about lots of cash buyers in the market. I think there's been a little bit of a return of foreign buying. That was a feature of the early 2010s, especially, that sort of almost was part of that apartment construction wave. So it was almost fueled by the foreign off the plan buying. So we might get a little bit more of that. But historically, the rule of thumb I have is that the end of the cycle doesn't happen until the yield, the gross rental yield, so the annual rental income divided by the price, is less than half the mortgage interest rate. So yields at the moment are around 4%, interest rates only 6%. So interest rates could still rise up to 8%, or prices could rise, so yields fall down to sort of 3%, and that would still be a plausible situation based on normal historical cycles. So look, I really don't know when the end of this cycle is going to happen. I'm very confident it's going to be within 4 years. Whether it's next year, the year after, or the year after, I don't know. In terms of the rental market, I like to look into the US. That's about a year ahead of us, and they've already seen a peak in asking rents, and now they've actually seen negative year-on-year asking rent growth, and they've seen a peak in the rate of growth of rents in their consumer price index, which is the rent paid on average across all renters. So I think we've got about another 12 months to run on this rental price adjustment, and probably the second half of next year. We'll be surprised at how easy it is to rent a place, even with this high immigration. And I think that's going to come off. Like, there's a bit of catch-up growth, there is. I really don't know how politically bold the current government is to keep these immigration numbers so high going into next year and not win some easy votes by tightening it up. Anyway, these are the things I think about in the next few years and how the end of the cycle will pan out.
Leith?
Yeah. So first of all, yeah, the rebound since February has been astonishing. I think, like I said last time, Catherine, pretty much the only economist I know who picked it was the Kook. So good on him. But I mean, like, you know, most of us would have thought that with, you know, the interest rates going up 4%, the cash rate and mortgages going up by a similar amount, and borrowing capacity shrinking by about 30%, that would usually mean, you know, you'd have prices falling until the interest rates turn around. Westpac did a really interesting study about 2 months ago and actually looked at the last, I think 8 or 9 up cycles in Australian housing, and this one's the only one that's been accompanied with rising interest rates, shrinking borrowing capacity, and also falling sale volumes. So it's actually been a really unusual rebound or boom, if you want to call it that. It's not really a boom, but rebound. Looking ahead, I think it's going to keep running because, you know, obviously we've got unbelievable immigration inflows. Housing construction, despite the fact the government wants to ramp it up, is actually, you know, tipped by pretty much everyone to be pretty sluggish the next few years. And the biggest thing of all is the RBA is probably going to start cutting rates next year. And when it does that, you're going to have, obviously, you've got all this sort of pent up demand from all the immigration stuff that's happening right now, or if you want to call that fundamental demand. And then you're going to have that getting assisted by interest rates becoming a tailwind. And so I can see it actually as having a, you know, some pretty decent house price growth next year, probably strengthening. In terms of the cycle, who the hell knows? Like I've sort of learned not to look more than a year ahead these days. There's not really, you know, I don't really see much point. But I think in the short term, real estate's going to go up, and we're going to have a pretty strong year next year. So just based on falling interest rates, rising borrowing capacity, you know, obviously still strong immigration, and you know, still tight rental market, and sluggish supply response, et cetera, et cetera. So that's my tip. End of the cycle, no idea. I'll leave that to you.
Can I just add one bit to Leith's comment about the construction being sluggish? You've made me remember, Leith. Yeah, the commencements of new housing projects have been sluggish recently. But what's interesting in the data at the moment is there's this sort of hangover. The number of dwellings under construction but not completed is still very high.
It is,
and
yeah.
so because of these, you know, the supply chain disruption of COVID and the delays in construction projects, the number of dwellings partly constructed today is near record highs. And although there's a lot of you know, financial distress in the construction industry, those will work through in the next 12 months. So we're actually going to see, I think, a bit of a bounce in completions, just of finishing off those apartment buildings, finishing off all those delayed projects. So we'll have that, but behind that wave, you can see that commencements are very low. We'll have to wait and see. So for the rental market, those completions will be good. But the orders of magnitude, again, with the size of the immigration program at the moment, you know, it's great. But if you have this stock of housing versus number of people model in your mind, then it's not going to be anywhere near enough.
Can I also add that interestingly, the federal government, the Albanese government's going to be releasing its next intergeneration report apparently next week. So that'll be very interesting to watch. So the last one, which was released in 2021, said that Australia's population was going to grow by 13.7 million people over 40 years, which is, you know, an astronomical increase. So basically 50% increase in 40 years. It'd be interesting to see what, so since that came out in 2021, we've obviously had the federal government ramp up its immigration projections massively, which only go out 5 years. It'd be interesting to watch to see what the next intergeneration report next week says for the population projection. I'm tipping they'll probably say, you know, instead of 13.7 million increase, it might be 15 or 16. But that's another thing it's not going to obviously impact the market in the short term. And like, this is all long-term stuff. But in terms of thinking about, you know, all this argument about, oh, we need more supply, the next week's intergeneration report is going to completely demolish that. Because, you know, you can bang on about supply all you want, but if you're going to grow the population by 400 to 500,000 people every year, which is the forecast, that's a hell of a lot of demand. Like,
how many Canberras is that, mate?
That's basically Canberra every year forever, which is ridiculous. So that's not just a Canberra. Canberra's got 2 major hospitals. You got to have 2 major hospitals every year. How many schools has Canberra got? You know that. This is just to sort of show you how ridiculous this is. Like, the federal budget said Australia's population will grow by 2.18 million people in 5 years. That's a Perth. We're adding a Perth to Australia in 5 years, according to the federal budget. So don't tell me this is a supply issue when you're going to add a Perth worth of population, an Adelaide of which is from immigration, in just 5 years. It is not a supply issue. It is a demand issue, because you cannot add a Perth with an Adelaide of that coming through immigration in 5 years and claim that it's a supply issue. That is complete BS.
So I want to, so obviously we're still pulling the same strands out of that, but just a couple of comments in relation to what you've said. I personally believe that we have to look at the real estate market from both a fundamental perspective as to what's going to happen short term, particularly if you're an investor. And let's face it, there's a lot of people are investing in real estate because the economy, the tax policies of the economy dictate that that's how you increase your wealth. It's a wealth building strategy. So for anybody listening to this, I think obviously taking into effect the fundamentals, which is what we're talking about here, which is that we have a demand supply side problem. There's more demand than there is any supply response is going to be able to balance out, means that we are looking at price rises in the near term. And then I feel that you have to take it from a cyclical perspective and understand what causes land prices to increase in the first place. And this is, you know, the Cook was accurate. Obviously, he did the housing debate between the Cook and Joy. And Christopher Joy had very dire predictions for how much interest rates were going to collapse the land market. And the Cook had far lesser dire predictions. And at the time, I mean, because I write about the cycle, my predictions were certainly not dire either. So anybody that was following what we write about at Cycles, Trends and Forecasts, the Land Cycle Investor would have seen that analysis. But the reasons, I think, also is because you cannot look at the housing market through the one-eyed lens of interest rates alone. There's a lot more that goes into land becoming profitable. One is a technological boom, which is what we're under at the moment. So a rapid technological boom, which, for example, you know, there's stories coming out about Amazon being able to, you know, roboticize their warehouses and therefore produce far more profit per square meter than they have been able to because of technology. And obviously that means that they have more money and need less land, which increases once those sites have been built out. It essentially increases the value of those sites because they can produce more income. So there's that side of it, and then there's also the fractional side of it as well. With you know, the BrickX is very old now, but it was that fractional lending of people being able now to easily join together and buy property, which is kind of what we've seen with, you know, foreign buyers, you know, Chinese buyers that come across and they buy in family groups. So there's more income going into a single price. So there's things like that come into the real estate market that people don't necessarily factor in. Cash purchases are another.
Yeah.
Don't know the money that's coming in from overseas, but obviously if we've got immigrants coming in, they're bringing a lot of money in, and that is all going to sink into the land market, because the land market is the only thing that is short on accessible supply and needed by all of us. For, you know, everything that we do is related to land, and everything that we eat and everything that is built around us is related to land. So I think it's important to kind of take that into account. But I did kind of want to swing onto the cycle a little bit, Cam, because you've just written a book. It hasn't yet been published, but it wouldn't be long away from being published. And you asked me to send you some analysis on the 18-year cycle, of which I did. I'm interested in what your thoughts about that have been, and hearing a little bit about what's in your book.
Yeah, so yeah, I have been reading, thanks, Catherine, on historical cycles. Just let me add to what you said then about, you know, sharing resources to buy houses at the end of the cycle. One thing I noticed at the end of the 2000 cycle that's resurging now is the idea of shared equity or government shared equity, or other types of creative lending practices to get people into housing. And we've seen that as a policy across all states and the federal government, this resurgence in the idea of shared equity. Now, that's all sort of popped up in the last couple of years. It died out during the 2010s, but if we cast our minds back 2006 to 2010, that was also a big trend in the latter half of the cycle, these shared equity schemes or lease to buy schemes, or all these creative financing schemes. Look, you know, on the cycle, it's just what really I think the big lesson for me has been, and what's sort of going into the book, is that a lot of housing debate, and not just in Australia, but in every country, they're having this debate in Canada right now and New Zealand, is a confusion of normal cyclical outcomes and current policy settings, right? So we get a normal cyclical outcome like rents adjusting right now, or prices resurging in the last part of the cycle. And everybody everywhere in the world at the same time is looking to their local government saying, why did you do that? Why did you suddenly do a policy that made prices go up? Where I think if we take a bigger picture, we see that the boom is inseparable from the bust. Like it is the same, what we'd call economic equilibrium. It's the same sort of system that's attached together. So I think for me, that's the big lesson. And so, for example, when we have discussions like we're having now about regulating rents because people's rents are rising quickly, my view is, well, yeah, we can do that. But if you look long term, had you regulated rents in 2010 in most cities except Sydney, it would have had no effect because rents didn't rise anywhere there for 10 years. And then all the rent rises have been now. So what we've got to think about is setting up policies so that they operate at all points in the cycle. So yeah, okay, well, if there's a limit on rent increases when rents aren't rising, that's good. When there's a big jump, we'll smooth that off and off we go. But thinking we're going to solve everything in one go, like solve the whole cycle just at the time where something's bothering us, I think is an important lesson. And that's part of the book. The other part that is probably relevant, it's not so much about the cycle, but it's sort of goes back to what Leith was saying before about almost the reporting or the propaganda involved with this recent policy announcement by the federal government, this 1.2 million homes. There's a real sort of lack of interest in the media reporting on housing to get into the details. So there was a headline the other day that said, yeah, Albanese will build 1.2 million homes. I'm like, that's exactly not what this does, right? Like, that's a completely wrong headline. It doesn't represent what's going on. And so one of the themes of the book is that the debate's been hijacked. It's fact free. It's propaganda from, you know, a politically motivated interest, a landlord group or property developer interest, some other business lobby who might be interested in immigration, then starts telling stories about housing. You know, the debate is really bizarre, and I suspect it's also cyclical, the state of the political debate, right? I think if we went back to sort of the post-financial crisis for that brief window, we probably had a sensible political debate about housing because we weren't under all these pressures and panics. But at the end of the cycle, it's almost a free-for-all of propaganda. So that's probably a couple of big insights that I've had.
It's so interesting that you say that, because of, you know, like how often do you tell your readers just not to listen to the headlines in the mainstream media, because they're pumping out articles, they're quoting people that really haven't got much of a clue of the underlying results of policies such as this. They're certainly not having an informed debate. And because Leith, that's everything that you're website is about, Macro Business. You've been going for, I don't know how long, you can say in a minute, but the value of a site like yours, and I think this is really important for anybody who's listening to understand, is that you're not going to get accurate information in the media. You've done a lot of interviews. You do a lot of interviews for Sky News. I know you did the Bolt report the other week, because you send me them and I have a look and they're excellent. But because we don't hear this narrative, it's not narrative that you're going to read in your newspaper. It's not narrative that you're going to hear everywhere, which is why your site is so important for people to come to and to really understand what's going on. Because if they don't understand what's going on, what happens at election time, we just keep getting the same government, whether it's Labour or Liberal. It's essentially just a different avatar, but same outcome, which is unaffordable housing. You dive in and just give your reaction to that. How long have you been, has Macro Business been going now? Many years.
It started in 2011, January 2011. So I went full-time January 2012, I think it was. So yeah, it's been a while. Yeah, I mean, look, obviously there's the serious articles, like the serious policy ones, which are the ones which are most enjoyable, but make no mistake. I mean, you know, we also write a few just the fluffy house price ones as well. And, you know, because the punters demand it. And those are always the most, you know, read articles of the day whenever I do just some, you know, short, quick piece with the latest CoreLogic data on house prices. So yeah, I mean, the website has those sorts of articles as well, but, you know, and if I don't write them, I get abuse. I get emails. Oh, wait, you know, why aren't you writing housing? You know, yeah, it's amazing. Like, so doing the website actually gives you an insight into the psyche of Australia, because, you know, basically the house price ones are the most boring articles I write. And they're also the, you know, I guess they're the most sort of just, you know, they're like take away food. It's sort of easy, you know, you just write them, you read them quick and whatever, and you throw them out. But they're also the most read by far. But then there's obviously the policy type ones, which are the ones I like writing more. But those also get less readership. So that's just the way it is. But yeah, look, certainly, you know, I think, and if you want to know why you write those, well, you got to blame Google, because if you don't do it, you can't keep your website going because you don't make any money. That's just basically the way it is. And I'm sure that's the way it works right across the entire media. But yeah, look, as Cam was saying, as you said, there really is, the debate on housing and all sorts of issues is ridiculous. So whenever I see one of these political leaders get in front of, you know, the mainstream media and they get interviewed on TV or whatever, and they say, supply. I never understand why one of the interviewers doesn't say, oh, couldn't you just lower immigration or something like that to them? They never raise the counterpoint. They never pick them up on their propaganda.
Yeah.
And it's just like, I'm sitting there going, you've got an own goal here as an interviewer. You could just ask them this and you'd force them to answer. But I'm not sure if it's because they've been told not to ask the question, or they're just not smart enough to ask it, or they don't have the guts to ask it. But you never get those questions asked. And it's infuriating. Like I saw Claire O'Neill get interviewed on I think Channel 7 the other day. She's the Home Affairs Minister, and she was going on about how the Albanese government, you know, she's always like hand on her heart, and she's like real virtue signaler. You know, we're doing everything we can. We're pulling every possible lever to solve the housing crisis. You know, we're fixing 10 years of coalition mismanagement. We're doing all this sort of stuff, and we're, you know, blah blah blah. An interviewer just could have said, well, why are you running the biggest immigration program in the nation's history? Where are they going to live? And that would have just shut it down. And I was just like, look at the TV going, ask it, and they never do. But that's just the, you know, that's the media landscape. It's all BS. Do your own research. Don't listen to them. Or you know, everything you read, whether it's my stuff or their stuff or whatever, just take everything with a grain of salt. You know, just be a free thinker, basically.
Mm.
Yeah, absolutely. Just so that we wind this up, because I know we all said we were going to keep this to an hour, and we probably would be able to, because there'd be a lot of agreement between us. But Cam, I'm interested in what indicators that you're going to now be looking for in terms of where the property market is going to go. That's what people that are watching this are going to be interested in. What are we looking for now that's going to give us a little bit of an indication about short-term movements in prices across Australia in different states and territories?
Yeah, good question. So one of the big global trends at the end of the cycle, and what we're seeing now is like a thin market, very little trade in property. It thins out. Everyone's sort of rushed in the price rise now. Everyone's kind of very hesitant. Sellers are waiting. The price is going to fall. I don't want to sell and then miss out the next wave of the boom, or am I, selling too early? Should I wait? So, in the US, turnovers at a historical low. In Australia, it's quite low as well. I think you'll see a change. While that persists, we won't see any big declines. We've had a bit of a price recovery. We might see a little bit of a wobble in prices, but relatively stable. And for me, the real sign that the end of the cycle is imminent is everyone stops talking about it. Everyone's still a little panicked because we've seen the price rise now, and then it fell, and then there was more to talk about, and now it's sort of recovered, and now we're like, it's boring. When it's boring, pay attention. And that's sort of my attitude to it. Pay attention. It might take 2 years, but pay attention. And I think the thing that's going to show first is you'll see a bit of a buildup of advertised inventory for sale in certain areas that's a bit stale and not turning over, and that'll come just before people really start worrying. Is this the top? Maybe I should get out now and really sell. We've seen a little bit of that in some places. The turnover of the number of dwellings purchased within 12 months or within 2 years is actually at record highs right now, I believe. I know in my area, I bought at the start of COVID, and I keep an eye out. A lot of the houses I looked at in 2020 are back for sale this year. Right, so some people are already, I've made some gains, maybe I'll get out now, but there's no rush yet. So they're the sort of dynamics I have in the back of my mind to keep an eye on when the end of the cycle is imminent. But you've got to be patient. I don't think anyone's panicking right now. Things could change. There could be a big share market collapse in the next few months. Big news out of China, and all of a sudden, investors in all asset classes change their mind and the herd turns. But patience is key, and just keeping an eye on those sorts of additional ads for sale in your area.
Yeah, I mean, in terms of the research that I do, you certainly wouldn't be expecting a huge downturn in the share market at this particular point. But everything that you've said is very relevant into picking the property market peak, which would be indicated from, increases in supply, which you'd see on the ground before you actually saw in the data if you're keeping an eye on the property market. And I think this is taken into account that when we're looking at an 18-year cycle, we're not just analysing it from what property prices are doing, but we're also looking at what's happening on the stock market, because the stock market is made up of a considerable amount of economic rent, in the form of building companies, REITs, building materials, banks. So often you see in the US, you see the stock market peak out prior to the, you see REITs and building companies and everything peak out on the stock market prior to the ultimate stock market peak. Because when we're talking about it, we're ultimately talking about 3 peaks to the cycle, which is a stock market peak, a property market peak, and a commodity market peak. So I'll write a little bit more in detail about that with the addition that I send out in this. But Leith, what about you? You spend your days looking at data, and you have done for many years. What is it that you're looking for when you're analysing what's going to happen to the property market?
Look, I mean, I think the thing to look for now is, has the interest rate peak happened? Looks like very likely it probably has. I mean, all the economic data is now weakening. The labour market data is coming in softer than expected. So I think, the chances are the RBA has peaked with interest rates. And the next thing to look for will be, when are they going to cut? I personally think they're probably going to do a series of cuts next year. I mean, we're never going to get down to the levels that were during COVID, but they could slice 1% off the cash rate or something next year. And then if they do that, that's going to add another little, spurt to the property market, because obviously, borrowing capacity is going to go up. Mortgage serviceability is going to be a little bit cheaper. And so you could see this, another little spurt of demand. What happens after that? I don't know. Like we'll just, we'll reassess in 6 months, and then another 6 months after that, and then you make your next call. But yeah, I think we're going to have, I can see the rate of price growth soften into the end of this year, just because affordability constraints, and we've still got a lot of fixed rate loans rolling over, and supplies picking up a bit in terms of homes for sale. But then once the RBA starts cutting, well, then we're probably going to be back to the races for a bit. So that's pretty much it. In fact, it's almost bad news for the economy is good news for the property market at the moment, because it just increases the chance of the RBA cutting interest rates. And once that happens, yeah, I mean, I think Cam said recently, a couple of years ago, that generally recessions are good for the property market. He said something like that, because of the impact on interest rates. So that's probably a thing to look at. If the data comes in weaker, that's probably actually good for property, perversely.
Yeah, Cam, any final comments on that?
Probably didn't say exactly that.
I'm paraphrasing.
I think it was that unemployment rates unrelated to the property market.
That's it.
So as long as we have an aggressive central bank that's really going to bail people out with low interest rates, if things hit the fan, then there won't be as much panic selling. Like, we never had panic selling in the financial crisis, never got that sort of price reset happening here. Look, it might happen in the next cycle, but our central banks and our variable mortgages are really a strong macroeconomic tool. So let's wait and see.
Yeah, it's a very good point for people to consider, and because it did save us in 2008, it was part of what saved us in 2008 from a large number of foreclosures hitting the market. And who knows what's going to happen at the end of this cycle. But yeah, certainly there's a lot to take into consideration and to look at. And I do think that whenever you're doing analysis on the market, you do need to take into the fact that this cycle has hundreds of years of research behind it. It's a very solid cycle in the US. There's a lot of evidence for it in the US. And of course, we now roll off that and synchronize with it here. So I think you do need to take that into account when doing any analysis, particularly, looking at those patterns of the cycle and what causes prices to rise and how that's going to affect the economy overall. But thank you both of you for coming on and having a chat. It's just great getting your insight. And the reason I say that is because it's insight that you cannot get anywhere else. There is no one else that's talking like this. There's no one else that is giving such independent thought. We've got Leith van Onselen from Macro Business. So anybody that's watching this, they should go on to that. It's not an expensive subscription, but if you really want to know what's going on in the economy, it's a subscription that you need to have. And of course, Cameron, how many Twitter followers have you got now? Cameron, like a whole heap of them, because you're such an independent thinker. You're obviously have got your Substack, which I will send out in this, that you release articles every week. And I think last time we met in Melbourne, you said that you just have so many ideas for those articles. You were talking about how to stop in the middle of a bike ride or in the middle of your shower to write down your ideas of what you can talk about. So again, like, I don't know anyone else that's giving the quality of content that you give.
Thanks, Catherine.
Yeah, no, you're very welcome. Okay, guys, we will reconvene at a point in the future to discuss where things have gone and how accurate our analysis has been in this edition.
No worries. Thanks, Catherine.
Fantastic. Thanks, guys. Talk to you soon.